Hey everybody, it's great to be here. Thank you, David. It's also great to see so many faces walking through, having coffee and seeing you guys sitting out here today. And it confirms the thought that London really is becoming the center of the disruption of retail and small business financing. And it's one of the very few areas where London, I think, has a chance to become a global center for a massive industry shift that's going to last for the next 10, 20, 30 years, in my view. And yeah, it's just, thank you very much to you guys at Wire, to David, these kind of events are really, really important. And the ecosystem that is evolving out of digital finance here is very, very valuable. So to give you a little bit of context on Wonga and then dive into this, we got going in 2007. We've possibly been one of the faster growing technology businesses in Europe since then. This year we'll lend well over £1 billion to well over 1 million customers. Just last month we serviced over 350,000 unique households just in the UK. So we're growing at scale, and what you'll see here, I think, is evidence of a consumer-led approach of what happens when you put the consumer really spot at the center of your proposition and what starts happening then. So, when we started looking at the space in 2005 and 2006, it was clear that there were already hero brands emerging who were transforming what consumers wanted to do. And simply by solving real everyday needs online, on mobile, in real time, these brands were changing consumer relationships in industries that had existed for decades and sometimes centuries. And what was obvious was that nobody was doing this in finance. And so, why was that? And it really was because the incumbents were literally stuck in the past. The incumbents have a lot of disadvantages in this space. IT systems have become legacy. What started out as opportunity and as advantage has, in the digital age, become a massive disadvantage and a massive source of inertia on these businesses. And what else has happened with banks and with other traditional financial organizations? More important than the technology is that they stopped putting the customer at the center. Long ago, products started being created by product people and lawyers and marketing people that were created treating people like idiots. And consumers got tired of that, and small businesses got tired of that. And Wonga is just one example, I think, of many, and you're seeing some of the traction that other startups in the space are getting. People want to be taken seriously. They want to be treated with a degree of dignity. They appreciate transparency. They appreciate being upfront and being honest. And the incumbents had forgotten about that. And that is the source of opportunity here for the various companies that are presenting today. So, in our own little way, what we did to innovate here was to create what we felt was the optimal amount of transparency. And in doing that, give control to the consumer. So these are our sliders that we created at Wonga that now many other players are starting to use, and we welcome that. And what we realized was that when people needed to solve a short-term cash flow problem, really there were only two questions they were asking, which is how much we needed to ask them, and that they needed to answer, which is how much they wanted and for how long. And now, why construct a product that forced consumers to take what we wanted to supply them? So we created a slider that was completely flexible and gave complete control and made the total cost that people would pay back completely transparent. And what we also realized was that people wanted to do this online. They wanted to do this on mobile. So it was about using transparency and using control and giving people flexibility, but putting it in people's wallets and in people's pockets and on people's desktops. And so, we launched online and very quickly added mobile and we'll continue to make the service available in a way that is as ubiquitous as humanly possible, because that's how people want to engage. People want to be able to engage in commerce and in social activities on demand, where they are, whenever they want to do that. And doing this, though, is complicated. And the way we do it fundamentally is through using a lot of technology and by using a lot of data. And we absolutely love data at Wonga. We, on an average transaction, the customer will give us about 10 pieces of data, but we'll go off and collect over 8,000 pieces of data before making a decision, all done in milliseconds by a machine, completely objective. So what we've done is take what we felt was a major failing in financial markets, and that is that bankers grew up feeling like they were well placed to use human judgment to make decisions. And we took a completely contrarian view to that. And our thesis was that machines could make these decisions in unemotional ways, in predictable ways, consuming massive amounts of data to actually make better decisions. And so, what people may not appreciate is that we approve less than 40% of customers at Wonga. So, the data that we're collecting is used very actively to decision. And those decisions are based on what's good for the customer and what's appropriate for the customer, and also what makes sense from a commercial perspective for us. And so we're using that data to make very real decisions all day long. And that data is massively helpful. It helps the consumer and it helps us. And we've moved beyond the world of anecdotal judgment-led decisions. And to my mind, it's a space where humans are particularly bad. And those of us who have recruited people in our lives and in our personal relationships with people, when you just reflect back, most of us are quite bad. And most of the data suggests that we're quite bad at making well-based judgments on other human beings. And so we leave that to the machines. We constantly feed the machines with more and more data. And we let the crunching of the data help us make the best decisions we can possibly make. One of the absolutely core principles of Wonga from long before we launched the service was that we wanted to be massively responsible. And for us, responsibility always meant three things. It meant, number one, being totally transparent. So making sure that at the point of the transaction, the customer knew exactly what they were going to get, how much it was going to cost them, when they were going to get the money, when they would need to pay back. Upfront, make it completely transparent. We then believe that people having that information can make good decisions for themselves. The second principle of responsibility for us is about giving control and flexibility to the customer, which isn't a new idea. I mean, Dell had done that long ago, where they allowed customers to start configuring PCs and laptops and choosing what color screen and what CPU and et cetera, et cetera. We hadn't seen that in financial services. And so instead of forcing customers to take £3,000 for a year minimum because that happens to be what the credit committee wants to talk about, or a mortgage for 20 years because that might be convenient to the product manager, we said, let's create a flexible system that allows a customer to choose exactly how much they want for exactly how long they want it for. And anybody here who's built systems knows that it's non-trivial to build flexibility into systems, but we did it because we genuinely believe in it. And we've gone further than that. So for example, at Wonga, there's free early repayment for anybody whenever they want, as a principle. So not only do you choose exactly how much you want and for how long you want it for, but let's say today you felt like you needed money for 14 days. And in 3 days' time, you didn't need it any longer. So you log into Wonga and you pay for the 3 days. You don't need to tell us why, you just do it. That's fine. And we believe in that. We believe that people shouldn't need to take any more credit than they want for any longer than they want it for. And that means not just upfront, but even if you change your mind after the fact. And that's revolutionary in finance. But it's not actually that radical a thought. It's taking inspiration from some of the best consumer brands in the world who have built very honest, enduring relationships with their customers and employing that in finance. So that's number 2. The third principle of responsible lending for us is about being selective. So even when we're transparent and even when we've given a lot of flexibility and control to the customer, even then we realize that there are times when it is inappropriate to borrow. And that's where our data comes into account. And that is where we use these 8,000 odd pieces of data to make decisions. And as I said, the majority of customers we reject. In the end, we decline to lend them money in that particular point in time because we do not feel like it is the most appropriate thing to do. And so to our minds, that's how we think about responsibility. That's embedded in everything that we do in the business. It's embedded in the training that people get when they join the company and in the products that you see when, that Wonga puts out in the market. But all of that said and done, as David pointed out, Wonga's in a controversial space. It's in a controversial space, we think, not so much because of what we do, but because of the history that the history and some of the ways, the way that people have historically thought about the space, the connotations of what we do. And so we've pushed the boundaries even further. To put it, we do customer service on Facebook. Today we have over 260,000 friends on Facebook. Like, find a bank that's got over 260,000 friends on Facebook. We do because people engage with us in a very social, real way, and we are very transparent. What you see here is a site called Open Wonga that you may be interested in having a look at, not just because of Wonga, but it's quite radical also in terms of financial services. And we publish a ton of data to Open Wonga. That we publish data about who our customers are, what the demographics are. We publish case studies, we publish responses, we publish critiques of Wonga as well as contras to that. We've created a form of media that customers interact with us on and other interested parties do, and it's completely open. And I would say that we make available to the public here a lot more data than many public companies make available. And we do that because we've got nothing to hide, because we believe in transparency, and we put it out there for people to have the debate, and we welcome the debate, quite frankly. So, responsibility really sits at the core of what we believe we're doing to contribute to a better financial services market. And the single most gratifying thing about building this business is really how our customers think about us. And there are multiple ways we track that and measure it and think about it, from Facebook likes to anecdotal conversations. But one of the metrics that we've used since we started the company is Net Promoter Score. Do other people use Net Promoter Score? Any of your businesses? Yeah? Oh, great. So I would encourage people to have a look at it. It's just a really easy to use, quite powerful metric. And what you can see here is Wonga's customers are more likely to recommend Wonga to a friend or family member than the customers from companies like Google, Apple, never mind financial services businesses. And that is, at the end of the day, the essence of everything in my view. It is worthwhile doing if we are servicing a customer need and customers are happy with it and would recommend it. And they're doing that in droves. So, our Net Promoter Scores are sky high. They're well higher than any bank in the UK or any other financial institution in the UK. But quite frankly, we use as our bar the best consumer-led businesses in the world. And that's how, that's the metrics. Those are the metrics that we keep stretching to, and the bar that we set for ourselves. So what does the future look like? So, we've always thought about what we're doing as building a platform that uses technology and uses data to solve specific customer needs in the financial services space. And we started off with short-term cash flow loans because it was a space in the market that we felt was being very poorly served, where customers were having to fall into overdraft late fees or go to shops on the high street or have people come to their houses. And in the view that we had, all were substandard, and customers have responded, I think, fairly democratically by deciding that this solution, being able to go to your mobile phone or going online and being able to solve a short-term cash flow problem on demand, is compelling. That's where we started, but that was never the full picture at Wonga. So, we've launched now in 4 other countries. We're now live, so in 5 countries, and those numbers will be growing over the next year and 2 and 3. And we see this as a play out of London that is genuinely going to be global. But we're also building new products. And the first new product that I'd like to talk about a little bit is a product that we launched middle to late last year, focused on the small business lending space. It's a product that uses what we think of as the best of Wonga: the speed, the convenience, the transparency, the flexibility, but repurposes it to solve owner-operated entrepreneur problems around free cash flow. We know that almost a third of small businesses in the country have had significant cash flow problems in the last 2 years. For small businesses, cash flow is the oxygen that they live on. As entrepreneurs here, including myself, we understand that. Most businesses that don't survive go out of business because they run out of cash, not because of P&L and underlying profitability issues. It's about cash flow issues. So, we can't solve the full quagmire of small business funding issues. We're humble enough to recognize that while we think we can make a contribution, we can't solve all the problems that small businesses have in accessing the wherewithal that they need to grow their businesses. But we also know that small businesses are what will help this economy get out of the stagnation that we're in. It's where employment will come from. It's where growth will come from. And so what we do here is think of ourselves as that last layer in the ecosystem of funding small businesses. Not to say that small businesses don't need equity, not to say they don't need long-term debt, not to say that they don't need other kinds of facilities. But there comes a time and a place in many entrepreneurs' lives where a big invoice is paid late, payroll needs to be paid tomorrow morning, another obligation needs to be sorted, a machine in a factory breaks down, and we're going online at 6 o'clock in the evening and getting funding by the next morning so that you're still in business and you get to live and face another day, and it's unsecured and you haven't had to put your house up for it, is a very, very valuable service. And so, very proud to have launched that last year. It's a service that we are intending to grow into a significant business for us. Uses the same data platform, the same technology platform as a consumer service, but repurposed so that it's bigger loans up to £30,000 for up to a year. But again, can be paid off early, same flexibility, same speed and same convenience as the consumer service that we've been speaking about. And a product that we launched earlier this year called Payday, which is an e-commerce financing tool and a digital payment service. What is special about the service, again, using the same platform, the risk algorithms, the identification algorithms that we've built at Wonga, is within the trolley, within the basket on an e-commerce site, allowing the consumer to pay in 4 installments for a product, simply helping people smooth the cash flow implications of bigger buys in an online and digital world. And we're up at over 10 merchants on the service, and very happy to let you know that conversions are great. We're happy with the metrics. The merchants seem to be happy. The average basket sizes using the service are up over 30%. So consumer net promoter scores are similar to our core products. So very happy consumers. Merchants are happy, and again, it's using the same platform, the same technology base to be able to solve a consumer problem in another space. And as us thinking about how we can help people in more situations than the situation that they were in just with the first product, and very excited by the prospect, and that together with internationalization is really where Wonga is going. So David, thanks very much for putting this together today. Congratulations. And thanks, everyone.